All right, let's jump right into this explainer of the June 2026 Rapaport Trade Diamond Index. If you follow the trade, you know we're navigating some pretty crazy currents right now. We're looking at a market that is fundamentally reorganizing itself around totally new consumer tastes and some incredibly specific demands. Okay, so we've got to address the elephant in the room right off the bat. A massive 27.29% year-over-year drop for half-carat diamonds. I know, at first glance, a plunge like that makes it sound like the market is in total freefall, right? But stick with me, because as we unpack the Rapaport data today, this actually sets the stage for a really surprising, nuanced recovery narrative. Here's how we're breaking it all down today. We'll start with a global snapshot, decode the latest pricing, dive into the fancy shape phenomenon, hit our global market spotlights, and then wrap it all up with the future outlook. Section 1. The Global Diamond Snapshot. Finding market stability. So surprise, surprise, despite those scary historical price drops we just talked about, the overall market and current prices are actually holding steady right now. But how people are buying, that's completely changed. Demand is, well, patchy. Buyers aren't just stockpiling inventory for the fun of it anymore. They're buying strictly to fill specific pre-existing orders. And where's the gravity pulling them? It is heavily skewed towards stones that are 2 carats and larger. It's just an incredibly precise, targeted market out there right now. Section 2. Decoding diamond prices. The RAPI numbers. When you really dig into the rapid numbers, you see exactly what I mean by a nuanced recovery. Yes, the year-over-year figures are deeply negative across the board. There's no getting around that. But look closely at the month-over-month performance. Those prices are actually clawing their way back. For instance, we're seeing a 1.65% monthly gain in 0.30 carat collection goods. Why? A simple drop in inventory. It's honestly a textbook case of supply and demand recalibrating in real time right before our eyes. And the 3-month trend for 1-carat diamonds backs this up perfectly. We all remember that sharp, painful decline back in March and April. But as we pushed into late June, the downward trend finally flattened out. The bleeding has basically stopped, creating a much-needed, stable floor for the trade right now. Moving on to Section 3, the fancy-shaped phenomenon, curves over circles. This is where it gets really interesting. Consumer tastes are making a massive, radical shift away from tradition. There is just so much fashion and energy being injected into the trade right now. Long fancies are absolutely winning. Elongated shapes, your ovals, your emeralds, your marquises are significantly outperforming traditional round cuts, especially in that super crucial 2-carat and larger category we talked about earlier. People just want something that faces up larger on the finger and feels a bit more bespoke. To show you exactly how intense this trend is, let's talk about cushion cuts. The market's obsession with elongated shapes is so strong that long cushions aren't just easier to sell, they are actually commanding a staggering 20 to 25% premium over square ones. Literally, just by stretching the proportions of the exact same cut, liquidity and value skyrocket. That is a massive premium in today's market. So, what's hot and what's definitely not? On the hot list, high-quality marquises are actually in critical short supply, making them the absolute priciest fancy shape available. Antique cuts, like modern old euros and old mines, along with long radiants and elongated ovals, are totally on fire. On the flip side, the cold list is brutal. Fancy shapes with bad proportions are completely illiquid. You simply cannot move them. And that fancy color segment that used to be so hot? Yeah, that's officially cooled off. Section 4. Global Market Spotlights, a tour of the trade. Let's kick our tour off in the United States, which is pretty much propping up the global industry right now. The wholesale market is doing quite well, heavily supported by some really strong post-Vegas reorders, especially for those modern old euros and mines. Plus, rounds in the 1 to 1.99 carat range are bouncing back nicely. But we're about to hit the brakes. Trading is slowing way down ahead of the July 4th holiday, and the entire New York Diamond District is packing up and closing down for the first 2 weeks of July for summer vacations. Before they go on vacation, though, the American buyer is laser-focused on a very specific sweet spot. We are talking high, consistent demand for 2 carats and larger in the F through J color range with VS1 to SI2 clarities. And that applies to both rounds and fancy shapes. It's essentially the ultimate trifecta. Size, a beautiful face-up white appearance, and an eye-clean clarity that maximizes consumer value. Jumping over to the rest of the world, it's a tale of extremes. Over in Belgium, trading is stable, driven mostly by a huge hunger for massive 5-carat plus stones and radiance. Israel, the market there is reporting a completely quiet scene right now. Meanwhile, India is seeing steady activity. Goods are taking a little longer to move, but they're seeing that nice rebound in the 0.30 carat range because of low inventory. Things are seasonally slow domestically, but everyone is eagerly gearing up for the big IIJS show in August. And finally, let's look at Hong Kong. The recent Jewelry and Gem Asia show definitely brought out the serious buyers from Southeast Asia and India. Now, while the loose diamond section was a bit sluggish, those premium 5-carat and above high-quality stones, they drew a ton of interest. Demand for anything 3 carats and up is rock solid over there. And between that high-end focus and a nice jump in gold prices, local retailers like TSL have successfully shifted their strategies and actually returned to profitability, which is great to see. Our final section, number 5, the future outlook. What's next for the industry? So, what exactly is on the horizon? Short term, we've got that immediate pause with the New York trade taking its July vacations. Right after that, we're expecting a solid jolt of momentum from India's IIJS show in August, which ties perfectly into their upcoming wedding season. And if we look a bit further down the road to April 2027, there's a brand new Basel jewelry and watch show launching, which could totally shake up the European trade calendar. But the future isn't just about trade shows, right? It's about how the industry positions itself. Right now, members of the trade are proactively rallying together for a major new initiative called the One of One Project. It's an all-hands-on-deck collaborative effort specifically geared toward educating younger consumers about the real inherent value of natural diamonds. The industry knows there's a huge gap in consumer understanding, and they are finally stepping up to tell the authentic story of natural stones to the next generation. And that brings us to our final, ultimate question. The Rapaport data out of Hong Kong specifically noted that younger consumers are showing a rising interest in synthetic diamonds. This isn't just a regional quirk, it's a global shift. So in a market that's currently obsessed with highly specific fancy shapes and bigger stones, will an educational campaign like the One of One Project actually be enough to win over the next generation of luxury buyers? Can it really secure the future of the natural diamond? It's a massive, fascinating dynamic, and we'll absolutely be tracking the data closely to see exactly how it all plays out.